This is the seasonal stock and ETF report for today, September 26, 2022. Let's first take a look at CNBC. It's down 31 points pre-market. As expected, the markets are going down. Today starts by taking a look at S&P 500 seasonality. I'm just going to select it, looking at it 10-year seasonal chart for S&P 500. Take a look at this. For this time, for this period, S&P 500 is going sideways. Then it takes a dive down here, and then it goes straight up afterwards. So this is the magic date that we want, which is around I would say mid-October. So the markets are going, S&P 500 seasonality shows that it is on a downward path based on the last 10 years of data until mid-October. However, there are also other magical dates. I've been looking at these dates for a while. The real magical date is October 25th. That's when bullish winds just starts coming in. We'll talk about that in the coming days. So now that we understand, we are looking at a down market. Basically, let me just go back to it, see what I'm talking about. I'm going to select this. Make it 16 days. See that low over there? So, the markets for the past 10 years, 2012 flat, 2013 flat, 2014 down, 2015, 17, and 2020, it was on the up path, but the rest of the time, so this is 60% last 10 years. This has been a down 16 days. How about last 20? If you look at last 20, it's actually has some, 2008 dropped sharply during this period of time. Look at that, 17%. However, it's been 55% positive. I'm saying 55% positive because Seasonal Viewer says this is a long opportunity now. We look at last 10 years, it's a short opportunity. How about 15? Oh, I'm clicking years. This has to be 16, this has to be 10. Over here, last 10 years, it shows that it's 60% down, with 2014, 18, and 21 being down. This is for just this week. So my assumption and the probabilities are on the side of down right now, at least till mid-October. So if that's the case, let's look at Dow 30. Does this make sense? Look at Walmart. Walmart has a down period before it goes up, 3.61. Does the Sharpe ratio increase? It does not. United Healthcare. United Healthcare is just the greatest stock ever. We won't look at that. Microsoft is on a sideway period. Visa is on a sideway period before any up starts. Look at J&J. Johnson & Johnson has a pretty decent Sharpe ratio for a very short term, 77-day long. But look at this. It's going to go down. So what if we change our start date to here? Look at the Sharpe ratio. The Sharpe ratio takes off. What that means is better to wait until mid-October to jump into Johnson & Johnson than it is to buy it today. Although it's not a bad time to buy it today, you're better off waiting till mid-October for Johnson & Johnson. How about Intel? Intel, look at that. Another down period right there. So there's a down period before it resumes up. So I would say a better time to buy it. Let's see if we can improve our Sharpe ratio. That's our goal, is to have date ranges with better Sharpe ratio. 1.16 versus, what was Intel? 1.26. So it dropped a tiny bit. Let's go to our magical date of 25th. It dropped even further. So it's probably better to buy it earlier. And most likely it's because of earning announcements. I am not exactly sure what the earning dates are for these. We will add these to these charts in the coming months, but not yet. IBM, the greatest short of all time, which is also better about here. The best time to short it is here, or after the next jump up. If IBM goes up, it's time to short it. At least during this period, it's best to buy IBM right here, which in this case it says October 28th. Look at American Express. Again, can we improve Sharpe ratio if we come here? Nope, about the same. Apple, one of my favorites ever. Right after the United Healthcare, that's the best one. Look at this sharp up right here. Right now we're sideways to up. Don't get fooled by this slope. This is one consistent slope. It's a very small amounts of downs. September is a down month generally for Apple, but so rare. Anything negative about Apple. Okay. We're supposed to look at top 10 in this, so let's go and look at top 10. Keurig, right on the top. This is another one of those. 2.51 Sharpe, fantastic Sharpe ratio. But what if we wait? It goes up. If we wait till maybe second week, this is a really good. And what this really means, Sharpe ratio, high Sharpe ratio means your returns have been consistently high. It's not like 1 year you make 1%, 1 year you make 20%. They are all fairly close. So the closer they are, higher the Sharpe ratio. It shows the level of consistency. Ooh, Netflix is on the list. Move along. Right there. Netflix has not been doing well lately. But here's a long opportunity on Netflix here that it's from 24th, which is this weekend, to beginning of October. Up 5% in average. Analog devices. It's a very short period of down, and then it resumes its up. So let's go to S&P 500. Top of the list is Walmart, of course. Walmart is just consistent growth stock. I mean, a lot of things people say and discuss in the news, but they can't show, you can come and look at it here. If somebody says Microsoft is better than, I don't know, Amazon, well, what does that mean? Well, you can come and look at it here. Oh, maybe I haven't shown one of these features. If you look at help, it's in there, but look at this. You can go and select buy and hold for any stock. And then you can take a look. What happens if you hold a stock from January 1st till December 31st, last 10 years, which is buy and hold. Walmart, last 10 years, made money 8 out of 10 times. 80% of the time. It did lose money this year, though. So far. This is year to date for Microsoft, for Walmart. But chances are it's going to go up. But this is the result of buy and hold. Okay, anything on Wilshire? No, Keurig and Walmart. Keurig is a better deal because it has a higher average profit in a shorter period of time. Let's just look at the ETFs. What's going on in here? Consumer staple is on the top of the list right now with a long. How about our shorts? Natural gas. Look at this. Natural gas drops this time of the year. However, we're bullish for now. But what if we look at this? Natural gas starts dropping on mid-October, and the drop lasts till January 6th. I was not aware of this. This is a good one. Junior gold miners. Yeah, gold and silver are going completely against seasonality because of rising interest rates, which makes the value, the money, become more valuable. And since gold and silver are money, they're going against their seasonal tendencies. So seasonality usually comes back when inflation and interest rates are stable. They don't directly affect the prices. Ooh, we went long today. All right, that's it for today.